morning and welcome. Patriot Radio News Hour, Joe and Jason on this Tuesday morning. It's going to be a big week in the year of chaos that is 2024. We got Super Tuesday today. I don't know. Is anyone watching it? It's going to be Trump in a landslide. Biden, I guess, is going to win his votes. We'll see how many people vote none of the above and all that other nonsense as the political environment picking up steam. And then we got Jay Powell twice this week in his testimony in front of Congress. Anything can happen. What is he going to say? The Fed emergency facility ends on March 11th. A lot of chatter about what is going to happen on March 11th in the banking industry. We'll talk about that. Community Bank of New York, it can't stay out of the news. Huge downgrades yesterday. Pretty much all of the rating agencies downgrading them again. Moody's, which downgraded them 2 weeks ago, downgraded them so far into junk now. I don't know what's going to happen there. I think this is a bank that either needs to go under or needs to get bought out because they're so far into debt now. Their ratings, they're going to have to pay a lot of money to keep these deposits. And I think Moody's knows something everybody else doesn't. Something's changed in the last 2 weeks. Moody's issuing a headline that they fear that the deposits at New York Community Bank, they're not going to stay. I mean, who would, right? I mean, let's not kid ourselves. If you bank there, you probably, especially if you're a business and you have to have over $250,000 in there, you're heading for the exits. Everybody's heading for gold, another new all-time record high. Get in. You know, how long have we been telling you? March. Well, guess what? It's March. Gold at another new all-time record high this morning, up another 10. It's been up as much as 20. Our toll-free number, 800-951-0592. The website at allamericangold.com. And Jason, a lot of chatter about March 11th. And a lot of people thinking, hey, there's going to be major turmoil in the banking industry. And I'm going to say this, there's already major turmoil. If you don't think there isn't major turmoil, then you don't know what you're talking about. You don't know anything about what's happening. But on March the 11th, the borrowing program that the Federal Reserve had set up for banks that were in trouble after Silicon Valley Bank failed last year, coincidentally in March, right? And Signature Bank that also went under. They're going to stop allowing the banks to borrow from that facility on March 11th, next week. Now, there's about $160+ billion being borrowed from that facility. You'll remember a month ago, the Fed, see, and this is the part that you know that there's turmoil. Because already, they won't tell you what banks are at the facility. Right? Because, again, they don't care about us. Because if they did, then you would think the Fed would, personally send you, hey, by the way, your bank's in trouble. You may want to move your money. No, they don't do that. Because, well, they don't want you to take their money out of bad banks. But they made it to where if you borrowed there, you got to make money from them. What money? How do they get to make money? Right? The Fed doesn't make any money. Well, they create money out of thin air, but yeah. Now, they ended that a month ago, and we're expecting a big drop in the banks borrowing from them. Because they were saying, well, listen, some of these banks maybe were borrowing just to make money that didn't actually need to be borrowing from the facility. Of course, what bank would want to borrow from a facility that says, hey, we're in trouble, if they didn't need to, right? But this is the idiotic logic that they put out there. That didn't happen. Didn't happen. And now the Federal Reserve is trying to force banks to all borrow from the discount window. So on March 11th, you can't do any new borrowing from the bank facility window, okay? Here's the thing. You have a year to pay that money back. So it's not like the banks that have been borrowing that $160+ billion on March 11th need to pay it all back. They don't. Whenever they borrowed the money, they've got a year to pay that money back. And then, of course, now the Fed wants all these banks, Jason, that are going to have liquidity problems to start borrowing from the discount window. And not surprising, what started to rise? Well, banks borrowing from the discount window. And again, this just tells us there are absolutely problems in the banking industry, and the Fed is trying to take problems and say, well, no, it's okay. It's okay. It's just, they're just having some temporary liquidity problems, Jason.
Yeah, it doesn't happen. It doesn't help that all asset classes are at record highs. Because if you're in that beleaguered bank in New York, even if you for some reason felt like it's going to be okay, you might just pull some money out, put it in Bitcoin, it's all-time highs. Maybe put it in the market, it's all-time highs. Put it in gold, it's all-time highs. So that's not going to, unless the bank is invested in paper assets in gold or Bitcoin or the markets, that's less deposits. There's lots of other places to put your money now suddenly.
(800) 951-0592, Patriot Radio News Hour, Joe and Jason on this Tuesday. Quick look in at the markets. The Dow's down 270. The S&P's down 45. The Nasdaq's down almost 300 points. Gold's up 10. 21.37, a new all-time high. Yesterday, we had a new all-time closing high. Silver is up as well, approaching $24. The 10-year note down to 4.15. Very interesting, as we're going to get Jay Powell over the next 2 days here and see what he has to say in his testimony in front of Congress. Crude oil a little higher today at $79 a barrel. And, of course, the gold and silver markets higher as well. And 2024, the year of chaos, diversification, and really diversifying for what's coming next. 2024 is going to have a lot of volatility. Unfortunately, I think what comes after the volatility is really what you need to be prepared for. Think about this. We had debt levels where every 100 days it goes up $1 trillion. We have banks now saying, hey, listen, the markets, the central banks of the world are starting to lose faith in the bond markets. And talking about, U.S. bond markets in particular. I don't remember the last time I went a week where there wasn't at least one bad auction. Most weeks now, we get at least 2, sometimes 3. Bad auctions. And bad auctions, as we know, just means, hey, what the markets want the bond price to be, no one's willing to borrow for that. They're like, nope, we want higher rates. And, of course, they want Jay Powell to cut rates. It's going to be interesting. I'm sure the Democrats are going to want all these rate cuts, and the Republicans are going to be worried about the banks and, all of these things, but being diversified is going to be the key. And, obviously gold and silver is showing you why that needs to be a part of it. But also check out our friends at YRefi. We keep telling you, listen, up to 10.25% return fixed. Not correlated to Wall Street. Not correlated to the Fed. Not correlated to jobs. Doesn't care what Jay Powell says. You can turn your income on. You can turn it off. They don't have fees. If you need your money back early, they don't whack your principal. I mean, they're great people, and it's for, you know what, and it's really for the greater good as well. Check them out. If you've got $50,000 or more, check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. And, Jason, it really is a tough situation that we're coming into. We've warned about March. We've been telling you because a lot of things seem to be colliding in March. We have Jay Powell's testimony this week. We have a Fed meeting this month. We have the ending of the bank lending facility. And then, of course, the reverse repos. Down over another $100 million last week alone. Down, I want to say it was $120 million coming out of the reverse repos. They're down to about a little over $300 billion, Jason. I mean, that's, right on schedule. As we said, we figured right around the end of March, maybe the first week or two of April, that's out of money. And now all of a sudden we're sitting here in this pattern that they were having inflation. Oh, it's getting better. It's getting better. It's getting better. And then in the last 6 weeks, inflation started to tick up again. Today we had the U.S. service sector and, of course, the global PMI. Both of them fell, okay, which means slower activity than the previous month. The biggest thing, though, unfortunately, was the inflation gauge inside of these surveys got hotter. So they're saying, hey, listen, business is slowing, but prices are rising again, and they're supposed to try to cut rates to save these banks. And we said this a long time ago, didn't we, Jason? There really wasn't any good option here for the Fed. It was either fight inflation and crash the markets or pretend to fight inflation and try to save the markets. But if you fought inflation, you killed the banks. And now, Jason, they're kind of stuck in this problem where they need to cut rates to try to save the banks, but yet inflation is starting to come back again, and of course the markets are fully anticipating that the Fed cut rates.
Yeah, I don't know why. I mean, what Jerome Powell or the Fed's going to say is, well, look at the markets; they're all-time highs. We're not cutting anything. Yeah, and inflation still looks like to be a problem, so we're going to just hold our position. There's no reason for them to cut at all. Zero. I mean, even if the markets are crashing on underneath the Dow and the S&P, there's no reason for them to cut rates until somebody says, "Well, look, the Dow's down 10% last month or this coming month or last month." Then they'll have to start talking about it. But with there's a little bit of profit taking maybe taken today and tomorrow. But I have the feeling there's going to be a lot of buying up to the weekend, and maybe this New York bank doesn't make it to the weekend, Joe, and they're not going to cut rates. The inflation still looks to be a problem. And what are you going to cut rates and make the inflation even hotter? I think the wait and see is the situation. We might have wait and see the rest of the year the way they're sitting there. So I don't know why these markets they're living in kind of like the child just thinking mom and dad's going to give them the extra $5 to go buy some candy, and it doesn't materialize, right, Joe?
Yeah, it is. Listen. I'll be honest with you. They created the problem. The 15 years of zero, this is the price that's going to get paid for that. And again, they changed all the formulas, and it sounds good, right? That's the one problem with academia, right? And people say, remember, and this applies. We know, how many people do you know that are really smart? Book smart, right? They're really, really book smart. But if you had them run a business, they'd run it right into the ground. right? Because they don't have common sense. They don't understand how the real world works. And these guys, the Fed is academia. It really is. They don't have real life experiences. These people didn't grow up in the banks. They grew up in government. They don't really understand how it works, and they had all these meetings. Well, we can pretend inflation isn't as bad because if this gets too expensive, they'll buy something else, so therefore we can say inflation's less, and that sounds good. But all of that theory that allowed them to take, because remember for 15 years, they told us, gosh, we just can't get inflation to 2%. Right? It's only 1.6 or 1.5. Heck, I think one time they said it was 1.3. It really never was that. But that allowed them, that was the cover, to leave interest rates at zero for 15 years. But then think about this, because I think this will be easy for all of you to understand about what's going to happen in March. At the same time, they forced all the banks, hey, you have to buy X amount of treasuries. You have to. You have to buy X amount of mortgage-backed securities. You have to. So they did. And now, when they need money, and it's interesting, you got to remember, they were already having problems at the end of 2019. And then miraculously, here came COVID, and everyone forgot that they were having problems. See, that was a dirty little secret. But the first dirty secret is they never fixed the financial crisis from the first time. They papered over it with, Jason, what was the number? How many trillions did they print?
29 trillion. You're talking about the housing crash, right? Yeah. Instead of
the
5.5,
housing
it was
financial,
29.
yeah. 29 trillion. They covered it up with $29 trillion. And then they started having trouble again in 2019. They covered it up with COVID money. Fast forward now, COVID money's gone, and they're having problems again. See, used to be, because that's what happened from time to time, the banks would sell some of their treasuries. They would sell some of their mortgage-backed securities. They didn't lose their backside when they sold them. Now, they're taking huge losses when they sell. Let's just say a bank's got to need $1 billion, which is nothing. They need $1 billion because they're short that day. Because they got to pay Joe Smuckatelli's mortgage and Smuckatelli's car payment and his insurance and whatever it may be. And, oh, by the way, another one of their big accounts decided, you know what, my money's safer at J.P. Morgan. I'm going to pull my money out. They'd be like, okay, yeah, I'll sell $1 billion worth of my treasuries. And usually when they did, they'd probably make a few dollars. Because interest rates, were kind of always from around, 5, 6, 7%. And that's when they bought them. Heck, some of them may have even made money. Gosh, I bought this when rates were at 7, and now they're only at 5. I'm going to sell the $1 billion and put some money in my pocket. Now they can't do that. They sell the $1 billion, and they lose like $100 million. Right now they sell $10 billion, right? They're going to lose $1 billion. This is the problem. And Jason, it's all been self-created in an attempt to just cover it up. And now we have these bankers. Think about, did we have a banking crisis before? I don't really recall. And I know ever since the financial crisis, it seems like the Federal Reserve has created how many different lending facilities. Look, quantitative tightening right now. We expect that, by the way, that's another thing that's supposed to change in March, right? They're going to start ending quantitative tightening. That's a bailout facility for the banks. Right? They've created bailout facility after bailout facility after bailout facility. And Jason, now all of a sudden the rest of the world's going, okay, yeah, we see what's happening, right? They've got a debt problem, and they're trying to fix it with more debt.
That's right. We don't even know everything that the Fed is doing. They've already proven that they will print or do things with money without the notice of the public. So we don't even know everything they're doing. They could be printing and bolstering any number of institutions or countries. I guess somebody has to do a FOIA request to wait 10 years, right, before you find out what they did in 2024. So it's very likely that a higher rates and printing money situation, which is what I keep thinking they're going to have to end up going to, is where we're at. Maybe you won't raise it from here, but man, it sure seems very unlikely they're going to lower rates in this situation, Joe. So it's like you said, you kind of just did the definition of recession. Yeah, you're selling $1 billion worth of assets and losing $100 million. I mean, that's a recession. That's money destruction. That's actually supposed to create less inflation, and we still have inflation with all of that going on, Joe.
When we get back, we're going to talk about the downgrades at New York Community Bank and what it means for depositors, and then earnings out of Target and bad news from Apple. (800-951-0592). Joe and Jason here on this Tuesday. Gold's up 9 right now, 21.36 as a big week, Super Tuesday today. But all the big stuff, we got jobs and Jay Powell for the rest of the week. We'll be looking for clues as to what the Fed is going to do. But Jason, these downgrades at New York Community Bank, let me tell you why it's important for everybody. This is part of why I think a lot of people are worried about March 11th. Because it is required. Banks are required to maintain in what we call an investment grade deposit rating in order to keep some contractual obligations that banks have with all of their, or I shouldn't say all, but the big business clients. So let me give you an example. Let's just say, for an example, let's just say you were Apple. And, of course, Apple's probably not at New York Community Bank. But you're a big depositor. Maybe you're a hedge fund, okay, that you have large deposits well above the $250,000. Normally, in those types of arrangements, there will be a contractual obligation that the bank must maintain what we call an investment grade deposit rating. As of the downgrades from Moody's this week, New York Community Bank no longer has that. They've been cut so far into junk, they no longer have an investment grade deposit rating, which now allows for some of these big depositors, Jason, to pull their money out, saying, hey, you breached contract here, and we're going to take our deposits. And I don't think it's by accident. I think a lot of people think this could happen to a number of banks that all of a sudden get downgraded to the point where they no longer are meeting their contractual obligations, and therefore making it very easy for these bigger depositors to leave those banks and essentially make them insolvent overnight.
Yeah, Joe, this bank doesn't look good. And you're right. How many times have we talked about how, it's some bank in New York. How does that affect me? There's just too many dots connected. There's too many institutions connected to too many institutions. You would think that a New York bank failing wouldn't affect someone in Colorado or Arizona that much, but it does. There's too many of these institutions that are indebted to each other. The medium bank, which is kind of what this is. I guess this is a big bank, but it's not really a big bank. Well, when they fail,
they call
what happens?
A regional bank.
Regional.
I think they were the 34th biggest bank, but they're what they would consider over $100 billion in assets. Kind of defines there's certain rules, more regulations that these banks have to follow when you get up to certain size. So they're definitely categorized as a bigger bank. But let me ask all of you out there, listen, because I know some of you are thinking, I don't have to worry. It's going to be like, New York, I don't care about them. And, stocks are at all-time highs, so I shouldn't have to care. Because if I needed to care, the stocks would be crashing. That's just idiotic thinking. Let me ask you. They decided, who's they? The Federal Reserve, the FDIC. They decided when Signature Bank failed, to give the quote-unquote good assets to this bank. Are you telling me that they didn't look at this bank and say, well, let's look at your balance sheet. Let's make sure, right? Because we just had this bank fail. The worst possible thing they could do is say, hey, we're going to have this bank take them over, and now that bank's going to fail. Right? That would be terrible. I guarantee you they were trying to make sure that that would never happen, because how bad would that look? But yet here we are. And I think the reason why this is where we are is because, as Jason said, all of these banks are kind of the same. Right? And obviously, what else does it tell us? It really tells us that the oversight from the Federal Reserve and the oversight from the SEC and the oversight from the FDIC isn't very good. Right? I mean, isn't that that's what it screams to me? I mean, this bank just took over those assets 6 months ago? Something like that, 6-8 months ago, they took over these assets. And now they're going, essentially, let's face it, they're all but gone under in that amount of time. Jason, what does that really tell us about what we know about the health of the banking industry? I mean, obviously, to me, it says we got a lot of problems that they're trying to cover up.
They're doing everything they can to get the soft landing. That's what it says. They're trying to slow it down and get their soft landing. We'll all lose a little bit, but if we lock arms, it'll be okay. We'll survive this, but we're all going to have to take a little bit on the chin. But they probably have. I would be surprised if these biggest banks have to bail out these regional banks have to take turns. Okay, Wells Fargo, it's your turn. Go buy out the failing bank that's going to hurt us, and then the next one's, well, J.P. Morgan, that bank, they borrowed from you the most. You're going to have to take it on that one. It's in Citibank. Yeah, you're next. It's all the same money. It's all the same companies. We all know that the world is owned by a small group of individuals. You got these companies that own controlling abilities in how many of almost every public stock out there. BlackRock, State Street, Vanguard. They own the banks. It looks like there's different companies owning this stuff, but it's just one big conglomerate in the end. It's just the big club, and they're milking this cow, which is the rest of the world, to the hilt, and there's just seeing how far they can push it. I mean, there's never has there been so much wealth concentrated in so few hands as there is today.
Yeah, and think about today, Apple down today. iPhone sales in China down 24%. That's hard to do. Apparently, Huawei making inroads there. And when we get back, Target, they beat the number, but What did they say about sales? We'll talk about that next. 800-951-0592. Joe and Jason here on this Tuesday. Target beat the number. Yes, their profits beat Wall Street expectations. Same store sales fell for the third straight quarter in a row, down 4%. Same store sales at Target. And you think about, well, gosh, inflation's probably 8%. Sales are down 4%, right? Yeah, I mean, it's really not a good situation. And Target said that for 2024, they expect sales to fall even further, another 3 to 5% from here. And Jason, this is kind of, again, right? We've got this bubbling that we're seeing all over the place, and the underlying weakness. Yes, did they do a good job of raising prices and I'm sure laying people off, controlling costs? Obviously they did. But the realities are sales keep falling quarter after quarter, and now all of a sudden they're saying, hey, by the way, they're going to fall even farther in 2024. It just kind of tells you that, we're pulling on the string here, and it's getting ready to snap.
Yeah, and Target's a good indication. You should listen to what they're saying. They're a good indication of what's going on because not just lack of sales. They can gauge how things are going because of foot traffic. And they got something else that a lot of the other stores don't have. They have the theftometer, When people are stealing more out of their stores, that's an indication people don't have money. And when times are so-called better, there's less of that going on. And look at you have to open up a plastic box to get a tube of toothpaste sometimes nowadays, depending on which store and which region you're in. And so when Target says, look, we expect it to go down, well, they're right there. They're boots on the ground, just like Walmart and any other department store that actually does live sales with customers, that they're saying that things are going down. Things are going down. Online retail sales aren't quite as much of an indication as a Target store is, Joe.
Yeah, exactly. Think about Macy's shutting down 150 stores, right? Outback Steakhouse. And I know, some of us live in a bubble. Arizona, you have a little bubble action in Colorado. The same thing, but even in Colorado, it looks like things are slowing a little, It looks like Colorado's a little ahead of Arizona, but overall, I think this is a situation where, again, the Fed wants to contract the money supply on one hand, increase the money supply on another hand. The reverse repos, I think, is going to be the biggest deal of them all. But obviously, next week, with the ending of the bank lending facility, and now you have Moody's and Fitch and S&P, right? They've got a target on these regional banks now, and how many more are they going to downgrade? Is it going to spread here from New York Community Bank? Are we going to lose another 2 or 3 banks? And like Jason said, who's going to take them? Right? I mean, yeah. I guess you're right? This big bank, like J.P. Morgan took Silicon Valley, right? Boy, don't you wait, but they probably regret now that they didn't make B of A or somebody else take Signature, because it really doesn't make them look good. But we got gold at record highs here. Prices continuing to rise. Today's special $20 gold pieces. Man, this is how fast things change. Regularly priced at $2,335. I've got about 150 of them at $22.95. So you're going to save $40 here. $20 gold pieces. These are the old ones, pre-1933. The Liberty's 1866 to 1907. There could be some Saints in there as well that go right up to the gold confiscation. $22.95 on $20 gold pieces at 800-951 0592 on the silver side of things. Got silver, approaching $24. Matter of fact, today it crested $24 earlier today. Jason, silver demand going to be about 1.2 billion ounces. That would be the second highest demand on record. It's going to be close. It may actually take out the record. They're saying that worldwide silver demand is going to rise 1%, and industrial demand is expected to hit a new all-time record high, according to the Silver Institute. They're saying that India will drive jewelry demand. Kind of interesting, right? As gold gets more expensive, India now becoming a major silver player. And just like we talked about, right now they're anticipating a market deficit of 176 million ounces in silver, and I know it's frustrating. A lot of us kind of frustrated thinking about, got silver, not even at $24 right now. Got silver should be in the 30s easily, but again, Jason, this will be the third straight year in a row where we've had silver demand outpace silver supply, and all the extra surplus silver has disappeared in the marketplace. And it's one of these trends that I think for a lot of people, when we look at, all-time record highs and everything else, silver's got to double. And actually do a little more than double to get to an all-time record high. But all you silver guys in there, hang on. It's just a matter of time. Because believe me, supply and demand still rules at the end of the day. 800-951-0592. Jason and I, we're coming right back to wrap it up. Final segment here, Patriot Radio News Hour, $20 gold pieces at $2,295. By the way, on the silver side of things, rolls of U.S. Silver Eagle, $635. Rolls a $0.50, which I still think this is a great buy. $215. What was it, a week and a half ago? We were at $180 for one day. We had a big special on it. Of course, silver prices are up almost $2 an ounce, $215. Rolls of silver quarters at $205. Rolls of silver dimes, $102.50 at 800-951-0592. And, very interesting thing here. New home listings jumped 13% in the last 4 weeks, Jason. Now, I don't know. Obviously, new home sales have not been rising. That we had a little pickup in December when the rates kind of fell. Now they've fallen back down. Just another one of these things. We got the NCAA, right? March Madness, March setting up to be madness. Could this potentially be the first crack in housing here? We'll see. Now, obviously, I think a lot of home builders like, hey, we want to have some inventory for the spring selling season. But this is the most significant increase in new home inventory in years. So, Jason, so many things that we're sitting there going, okay, that worries me. This worries me. What about this, right? We talked about Apple today and what's going on with iPhone sales in China. Target, Macy's, right? All of these retailers saying, well, we're making some money, but sales keep falling. And now all of a sudden, the first notable increase. Now, granted, this is new homes in housing inventory. Usually when you get these kind of numbers, you start to see the home builders start lowering prices. That hasn't happened yet, but we'll see what happens.
We'll see what happens, Joe. Yeah, we'll see what happens. I mean, the only reason housing prices haven't subsided some is because of the inventory. The housing crash kind of just permanently put America in sort of a short supply. And as it was just starting to catch up, that's when 2019 happened, COVID, and then the building slowed down again. So I'm not so much worried about housing as I am everything else. Yeah, I think housing will go down if everything else goes down, but I don't think it's going to take it on the chin as much. It's just so expensive.
Yeah, it's not going to be the leader like it was the last time, right? Housing was the leader last time. It's not going to be the leader this time.
That's correct, and like I was just saying, it's so expensive, Joe. So many people, and Joe, he's operating in Arizona. I got so many people. It's like, I haven't written a check, and so I can't even remember the last time I wrote a check. They're really guiding people into this digital money. And the other thing is like, I've sold property. I've sold property to pay my bills. I've sold property. I'm going to maybe buy some gold, but now they're out their property, Joe. It's just a really putting the squeeze. Peanut butter jar it's just getting cleaned out right now.
Yeah, the Dow's picking up a little bit of steam here, down 320. Of course, mostly led by Apple. The S&P's down 50. The Nasdaq's down 280. Gold's up 10, 2136. Silver's back to unchanged here, 23.75. $20 gold pieces, $2,295 at 800-951-0592. Jason and I are coming right back with the half-empty cup, and I think we're going to go back and look at Oklahoma City today on the half-empty cup.